Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Tuesday, July the 5th, 2011. Well, a small red-bodied candle today and quite a change of sentiment from the past trading week. We saw very large green-bodied candles with the buyers in total control of this market, closing up towards the highs of each of those candles as the market rallied up into the cloud and then broke out with a bullish breakout above the cloud in Friday's trading. That is a buy signal in Ichimoku charts terms, so quite important to keep an eye on this market for a potential continuation of the trend to the upside. We haven't had a change of trend to the downside yet, so that first time frame trend remains up. But we do have a red-bodied candle, and that denotes the sellers making net bearish progress, as opposed to the buyers making a very solid amount of net bullish progress on the previous day. So a change of sentiment in the market. Now that could have something to do with the holiday period beginning, a lack of interest in the market, so that could be the reason why we haven't seen the bulls continue up on their way. The good thing for the bulls is that the market really didn't sell off substantially. We have had we've had a loss of upside momentum, and the buyers certainly aren't as strong as they were, but the sellers really aren't terribly strong either. We do have this small red body, and we have a large shadow on the bottom of the candle, and the large shadow comparatively in relation to the body suggests that the sellers lost commitment as they were trading down around the lows. Now those lows coincided with the top of the cloud, and the top of the cloud there acts as an area of support, as it quite often does. So we do need to watch that area over the next few trading days for it to act as potential support. We also have potentially strong support at 1332 and down within the cloud at 1324, 1313, and the support extends all the way down to the bottom of the cloud, which is roughly about 1310. Below there, strong support down to 1300, especially at the Kijun-sen and Tenkan-sen. Now we did have a crossover of the Tenkan-sen above the Kijun-sen, which is a bullish signal in Ichimoku charts terms. And that's only a fairly weak signal because it occurred below the cloud, so we do need to be aware of that. In Ichimoku charts terms, we are bullish in the longer term time frame because the market's trading up above the cloud, so we did have that bullish breakout, and it wouldn't surprise to see the market go on with that move. For the market to go on with that move, however, we do have some very strong resistance that the market would need to test and break out of in a bullish way. This area around 1344 has been a very solid area in the past, an area of previous support and resistance. So a bullish breakout above there is very important. There isn't a lot of resistance until the market trades up to about 1360, but there is minor resistance. We can see the shadows on the tops of these candles where the buyers were losing commitment as they were trading up around those areas. So not strong resistance, but there is resistance up until about 1360, and then at 1363, 1364, that was a fairly strong area of resistance in the market previously. Now, with regard to the Tenkan-sen and Kijun-sen, the market is trading up above both of those indicators, and it has been for the previous 4 trading days. So in the medium-term and fast-term time frames, the market is bullish, so that's quite a good sign in those lower time frames. Just looking at the ticker span here, that's the orange line here, and that's simply the closing price projected back 26 periods. We compare that to the corresponding price action, and it's above. So we have had a change of sentiment there, and that is reinforcing the overall bullish sentiment that we've got in this market at the moment. So for tomorrow's trading, certainly watch the area above the highs of the candle. And one thing I should mention too, it could be quite important for this market, a tweezer's top pattern. So we do need to really be aware of that there is potential for a change of trend, and we do need to watch the low of the current candle for a potential lower high and lower low. Now, having said that, though, we do need to watch the support down below. As we've seen previously, there is very, very strong support down below. So even if we do have that change of trend to the downside, the potential for the market to retrace this very significant first time frame uptrend that we had may be limited by this very solid support that the market will encounter fairly soon if we do have that change of trend. So we do need to watch these areas down around the low of the current candle, extending down all the way down to through the 1310. As we said, the upside, or as I said, to the upside, there is still potential for the market to continue trading up, and 1344 is a very strong level.